In the year 2022, property prices here in Germany fell by 0.71%. Oh my god, it's happening! The real estate bubble here in Germany is finally Hold on a second. If there's one thing we're trying to teach you here on this channel, it's that things go much deeper than just reading clickbaity headlines. So let's not jump to a conclusion just yet. Let's see what's going on with the German real estate market in detail in this GermanReal.Estate blog. To make sure everyone understands where the current buzz is coming from, Postbank is releasing their Wohnatlas report every year, showing the average property price development here in Germany. Over the last 5 years, we had plus 7.2% in 2018, plus 9.3% in 2019, plus 9.6% in 2020, and plus 14.2% in 2021. That is more than 40% price increase in just 4 years, which is pretty insane. And it gets even insaner that these price increases are after inflation, a fact that we will come to later on. And now, just a couple of weeks ago, Postbank released their newest report of 2022, showing that the average property prices fell by 0.71%. That means property prices are falling for the first time in, I don't even know how long, probably for the first time in 10-ish years. This gets a lot of people freaked out, and this also gets a lot of real estate crash enthusiasts say, I told you so. If you're a bubble believer, congrats to you. You finally got what you wanted, I guess. But when trying to look at the numbers rationally, there's two worth pointing out. The first is inflation, and Postbank even writes minus 0.71% after inflation. What does that mean before inflation? What is their inflation rate? It's 6.9% for 2022, a lot higher than the prior years, of course. Postbank is writing in their report, with a 6.9% inflation rate, property prices in Germany are falling on average by 0.7%, which means property prices rose nominally by 6.2% without factoring in inflation. So, still positive. These are returns the stock market can only dream of, with major indices being down by about -12, -14% in 2022. And inflation is also pretty good for real estate investors. That's also what separates real estate from the stock market. We talked about this in other videos before, so just in short, because real estate investors leverage with a mortgage, we love it when inflation makes our debt smaller and smaller. And second, we have to compare the inflation rate with interest rates and not look at individual variables completely isolated. That will lead to wrong conclusions. We talked about this just a couple of weeks ago when we found out that rents here in Germany are actually getting cheaper. A very surprising fact for many people. If the inflation rate is 6.9% according to Postbank, what are the nominal interest rates? It depends what accounts you're looking at, of course. Here in the EU, it's currently 3.73% for flexible savings accounts and up to 5% for fixed-term savings accounts. Both calculators are linked in the description, so you can check out yourself what interest rate you can get whenever you are watching this video. When you get a 5% nominal interest, but inflation is at 6.9%, what does that mean? Well, in very easy terms, you are losing almost 2% of your hard-earned money every single year. And that's not good. This is when economists talk about a positive nominal interest, 5% in that case, which was different just a couple of years ago if you remember the Verwahrentgelt period with minus 0.5% negative interest rate. Banks charging you to store your money. Now we have a positive nominal interest rate again, but still a negative real interest rate. Because 6.9% inflation brings your nominal 5% interest rate down to minus 2% real return. What does that mean for investors? And more importantly, what does this mean for real estate investors? Let's use the example of our community portfolio some of you guys are invested in. We bought the property in Düsseldorf last year with about a 4% interest rate on our mortgage. We paid a bank 4% to lend an enormous amount of money from them, and at the same time our mortgage loses 6.9% just from inflation alone. If that's not the best deal in the world, I don't know what is. And that is why investors will keep on buying properties despite the higher interest rates, as long as inflation stays high. Especially if property prices keep on rising by 6.2% on a nominal level. I mean, think about it. When we bought a community property in Düsseldorf, we basically made 20,000 euro right there because banks said the property is worth much more than we bought it for. Our mortgage lost 6.9% in real value because of the inflation rate alone. We made another 20,000 euros there. We have to pay 4% interest to the bank. Okay, but interest for real estate investors is tax deductible, so we don't give a fuck actually. Not even 1 year after buying the property in Düsseldorf, this has already been an enormously profitable investment where the community made tens of thousands of euros. And we don't even utilize the 3% depreciation yet, because the property is not finished, which will bring our return up even more. And we don't even have a tenant yet paying us rent every single month, which will increase our return even more. Of course, I would have loved to invest in real estate with the property price of 2010 or 2011 and the mortgage rates of 2019 or 2020, but that's just not the reality right now. And we all have to accept that if we like it or not. At least we made the best out of it by making a really good investment last year in Düsseldorf. And the question is today, whenever you are seeing this video, is it a good time to invest in real estate here in Germany right now? If you ask me, yes it is, if you do it right. It's not as easy anymore as it was in the past. You buy any random property and expect to get rich. That's just not gonna work anymore. If you want real estate to be a profitable investment, you need to do it right. Just as the stock market, the bond market, or any other investment for that matter. Just buying a random stock you found on Wall Street bets, it's not gonna work either. And that is why we created our GermanReal.Estate marketplace, so you can invest in high quality real estate here in Germany in the easiest way possible. The highest interest rate we currently have is 12%, which will still give you a good positive return even after inflation. Link to our website is in the description. Happy investing everyone!